All right, welcome to my daily review. You're looking at a daily chart of the Nasdaq. We talked about this breakout from the cup with handle pattern here back in May 10th here. You can see the cup with the handle, and the breakout was on May 10th. It ran for about 10 weeks to July 19th. May 10th right here, boom. And it ran 18% from May 10th to July 19th, and now corrected 9%. So, you really want to step on the gas while we're in this power trend. And, for me, 100% invested or close to it. And then as we pull back here, you want to, tap on the brakes or have less exposure to the market. But anyway, that's, this is the trend. Higher trend, pullback, totally normal. Like I say, an 18% move higher, May 10th to July 19th, and a 9% retracement, which is 50% of the move. Friday, we had a pink rally day, and today a dead cat bounce. I know it's the dog days of summer, but there's a lot going on here. And excuse me for these long videos, but this is for the dog days of summer. This is really, there's just a lot going on. So that's why these videos are taking a little longer. And since, I really dislike this saying a dead cat bounce. I like live kitty cats, and I like live dogs too. So the dog days of summer and the dead cat bounce, we'll just call it a live cat jump here today. How about that? So we got the bears and the bulls and the cats and the dogs. And this is day 2 of an attempted rally. The pink rally day was Friday. This is day 2. We wait till day 4 because usually, the first 3 days could be, just short covering after this, massive, well, not massive, but after this correction here, 9%, the shorts have a lot of profits. So give them 3 days to cover. And then on the 4th day, from then on, we expect the institutions to start supporting this market. And you can see today the volume was really low. The Nasdaq was up 206 points, or a 1.56% on a lower volume. So we're just watching that. Like I said, there's a lot of stuff to get to, a lot of news, and I'm gonna get to the best I can. Most of this stuff, obviously, all eyes, air quotes, are on the most important earnings report ever reported here on Wednesday. NVDA is going to save AI, save the market. But if you just look at the stock here, you have to be encouraged that it traded below the 50, and now it traded above it today, well above it. It smashed right through it, and it closed at 97% of its daily range. So that's a nice hammer candle, which would indicate, that there's probably going to be some further buying going on as we head into that print on Wednesday. I just, think that if the AI theme is going to be real and it's going to have a long-lasting effect, this stock's going to have to be a major player in that. So anyway, NVIDIA, what a nice day today. A couple other stocks I want to look at. Meta, everybody hated it last year, and then everybody loved it here at 320, and now everybody hates it again. It's below the 50. The business hasn't changed. They're growing their earnings and revenues, and I don't know. I just think I'd rather buy it. I'm not telling anybody to do anything, but I'd rather buy it at 290 than at 326. I think these pullbacks are giving opportunities, is what I'm saying. We've seen a lot of this in 2023, where stocks trade below their 50 for a little while, then they rally right back through. So that's what I'm watching for with these big mega cap tech stocks that have been kind of hammered a little bit lately. Adobe, this one didn't even traded down to its 50, but their founder, John Warnock, passed away over the weekend. He was the creator of the PDF, the portable document format. So condolences to his family. He made a huge contribution. Adobe has a huge headquarters there in San Jose, California, my hometown. And anyway, Adobe, nice rally today, 2.5%, bounced off the 50. And that's what you want to see of a stock. This is kind of a bull wedge pattern, as it pulls back here to the 50. Lighter volume, and then bounces 2%. That's kind of what you want to see in a stock. Support at the moving averages. Let me see. Oh, one more. Tesla congrats to the Tesla longs today. They stopped that downslide. This is an island reversal candle right here. You can see why they would call it an island, because it's not touching, you know, the high from Friday is well below the low from today. And that's what, and also it's got that hammer candle closed 93% of its daily range. So there's your high on Friday, 217.58. The low today was 220.58. So $3 above that high on Friday. So you got to pay attention to that. That looks like a new reversal here for Tesla. It could move higher and trade right back through that moving averages. We'll see. Typically those are resistance, but just got to take it one day at a time now, especially as we wait for this follow-through day. Hopefully this week, we'll see. Got to always stay positive. I'm going to go to the semiconductor stocks first, because they've been beaten up quite a bit. I asked over the weekend, can we have a real sustained rally without these things? And I don't know. I think they have to participate, especially if AI is going to be, you know, the theme here. Anyway, AMD just is traded back below its 50 here, close this gap, and it's these moving averages should be resistance. We'll see if they can trade through them, and it's just going to, you know, we're just going to have to wait and see how it trades. This is ACLS, same thing as AMD, below the 50 has got these moving averages that it needs to trade through, and I like how it made this low on Friday and closed near the high, and then rallied back up again today. You can see that the low, rally near the high, and then today a nice hammer candle, closed 94% of its daily range. So ACLS looks good as well. AEHR, this one gives me a heart attack. I call it the heart attack stock. It's not air, it's heart attack. Anyways, trades below the 50 now the last 2 days. Looks kind of like ACLS without the you know, the real strength here, but it needs to rally through its 50. And with this one, you know, if you just look at the chart and say, well, you know, I could just sell it at 40 and buy it at 23, and then sell it at 44 and buy it at 36, sell it at 54 and buy it at 40. It's a swing trader's delight, but man, it's just really hard for me to deal with that thing. Anyway, if you are handling it better, congratulations, but that thing has been a bear. This is on semiconductor. I'll stop with all the animal references too. On semiconductor on Friday, same thing. It hit a low and then bounced higher, and then today rally closed 79% of its daily range. Nice move though, 2.5%, but they've got to get through the 50 here, and that's what I'm watching this week. And you know, if NVIDIA has that strong report, it's pretty good chance they'll do that. SMCI, one that I haven't talked about for a while, but this one made that low on Friday and closed near the high, and then today rallied higher. Maybe all the sellers are out of here. You know, everybody who wanted out is out now, and maybe some buyers can come in and drive this thing higher. It's up 3.5% today, so nice move for SMCI. And I'm going to get out of the semiconductors. Let's go to the software names. Palo Alto obviously had earnings on Friday, gapped higher. Probably a little short covering, but massive volume. And now it's back above its 50 simple moving average. So definitely something to watch, see if this one can power higher. It's got the high of 258 there. So that would be the number to watch for me. But it had its coattails today, and Zscaler was packing on the Palo Alto Networks report, up nearly 5%, but still needs to get through the moving averages here. And Crowd looks a little stronger as it traded above its moving averages. You can see those moving averages converging here. The 10 and the 21 and the 50 there are all like 2.4, 2.5, 2.8%. So there's a name for that, but I'm not going to get into that. But usually stocks are trading tight when their three moving averages are converging like that. Anyway, I'm going to get out of the semiconductor names and the software names, and I'm going to go to something. Let me take you down the negative road here, and I'll bring you back on the positive track. This is Builders. First source, one that I was watching because it sliced its 50 and then had a little rebound on Friday, and then today, no strength, you know, no buyers, and maybe it'll just trade a couple days below here and rally back above. I wouldn't give up on them. I heard some people saying the home builders are rolling over, and they don't look good, I'll admit, but I wouldn't give up on them just yet. Give them another week or so. This is a DR Horton, same thing as Builder, tried to stabilize on Friday, and then this one undercut its low from Friday, where Builder did not. Pulte Homes, this one is trading below the 50, so I don't like that look, but I'm going to give them a chance and keep watching them and not call them dead just yet. Lennar looks a lot worse here, as it's just trading lower and making new lows, so we don't like that at all. Anyway, stock that did sell off, I'm going to go to the retail now, is ELF, and you can see how this one looks different. Yeah, it sold off big time, like almost 10% on Thursday, but on Friday found support at its 50 and closed in the top half of its daily range, and today traded back down to its 50. You can see that number was 116.32 today, and the low was 116.38. So it traded down to its 50 and then bounced slightly, and that's what you want to see, these stocks being supported. And this is totally in character with ELF, because you can see the many times that it has pulled back to its 50 over the past year. It hasn't formed a base, but it's pulled back to its 50 several times. And I got to go to the weekly for this one, because it's been a long time since it formed this base, and you can see the pullbacks here. So it's still in character here, as long as it's above its 50. Now, if it slices it and with volume, and it trades below it for a while, then it's adios muchachos. But for me, this thing still looks pretty good as a trend trader. Okay, the other one is Dix. They report earnings tomorrow, and I just wanted to show this because this is in consolidation, and they sell Crocs, so it's going to have a good earnings report, right? I expect Dix to have a good earnings report. They're a pretty well managed company, trading above the 10, and we'll just see what happens tomorrow morning and see what she has to say, the CEO. But they're a well managed retail firm. CELH, our friend Jonah Lupton from Lupton Capital, keeps giving us the goods on the Nielsen reports, and the Celsius is taking market share. And today he actually said they are raising prices on their Celsius drinks, and I've been buying them from Amazon, and I can confirm that they have raised the prices of the Celsius drinks. And so everybody in the food and beverage industry is raising prices on the consumers, and of course the consumer takes it in the shorts as usual, and we just pay higher prices. But you could see the gap higher, and a trade down to the what was it, 2 days, 3 days, it pulled back to the 10, and then now the last couple days bounced, and so it's getting supported to 10, which is something you want to see. I need to see this thing trend higher, and I think it will. Celsius looks really good to me. The drugs, I like the drug stocks. NVO is my go-to, but if you have Lilly, that's probably doing better right now. It is doing better right now. NVO with their Wegovy and Ozempic drugs, just doing really well. I mean, what can you say? It's above the 10 here. I wouldn't recommend buying it here, but if you hold it, I don't see any sell signs. 2.7% above its 10 EMA, and of course Lilly's the B stock of the market right now, man. It's hard to find a stronger stock. This thing is definitely on the heat list, and showing strength and doing well. And KView was in the news today because Johnson & Johnson oversubscribed it. It has been a real dog, but today it was up 3 cents. That thing fell out. Okay, it was up 23.69, and it, oh boy. Anyway, Johnson & Johnson, wow. All right, let's get to something a little better. Regeneron, they had news when they're, and you can see the double bottom base here. If you're into double bottom bases, you can see the double bottom base and the breakout here. Friday it was up 2%. Today it had on another 4%. Regeneron has that EYLEA drug, which is going to help with the eye disease. So allegedly, this is going to really be a blockbuster drug and get Regeneron back into the revenue groove here. So we'll just have to wait and see how that does. I'm going to go to the data centers, because one of my favorite areas here. Vert, this is the infrastructure power play. And this thing gapped on earnings, pulled back to the 10, and just find support up 3-something% today, getting decent volume here. It's one that I really like. There's quite a few of them here. Then construction power plays that I really like. This is STRL, Sterling Infrastructure, gapped higher in earnings, pulled back to the 10. Looks a lot like Vert. It was only up 0.5% today, but definitely showing strength. And then Quanta Services, this is PWR is the ticker symbol. And you can see this one's trading sideways. That's got to be a 3-week tight pattern. Yeah, right there. Okay. Oh, 5 weeks tight. 5 weeks tight. I misspoke. It says take profits. Here, let's get this here. 3 weeks tight, 5 weeks tight. My goodness. So it's trading tight, no doubt. I like it over $200. That's PWR. And then PRIM. This is a daily review. You could see the, I'll go to the weekly since I look good. You can see the consolidation here, cut, handle, breakout in the profit zone now, but definitely a strong stock. Pulled back to its 10 EMA on Friday and found support. This one's doing nothing wrong. Okay, let me see. Oh, the last thing is the air conditioners, HVAC. Modine, this one gapped higher in earnings, pulled back to the 21, now trading above it, nearly 4% today. I like the HVAC plays due to the infrastructure bill, and well, they're just delivering strong sales and earnings. You can see here from Comfort Systems up here, 65% earnings growth. Not too shabby. I think O'Neill talked about the stocks that had the monster stocks for 70% earnings growth, before their big move. So this one's showing 66, 65, and that's what you got to look for. They're not going to go up because of the charts. They need the sales and earnings growth. And this is a Carrier. This was a spinoff. Pulled back to its 50 and found support. That's why I showed that one. That looks like a long wedge pattern. Anyway, that's it for today. And I got to honor the great Steve Jobs with one more thing. And I actually have more than one more thing today. I have Zoom, the computer software company, reported earnings and revenues above analyst expectations. It's up 3% after hours. So that bodes well for tomorrow. They also raised earnings guidance, I believe. And then Fabrinet, electrical contracting manufacturer stock, up nearly 15% after hours after crushing their earnings, and they announced a stock repurchase program. So I think that's helping that stock. And I did want to take a look at a couple of stocks on our watch list. We got the king of the internet, Google. This one you can see the consolidation pattern and the pullback to the moving average, and it just closed right here at the 21 today. It's a slower moving stock. I mean, it had this big move here and now consolidated. So you're going to have to give this one some time. This is not going to move like NVIDIA. Arista Networks, this is one that I do hold, and it's consolidated in this base. It really looks like it wants to push away from its base. It was up, a little more than 2% today. But I think if the market starts to rally, this one has a chance to make new highs, which is not saying much. The new high would be 190. So, but anyway, and the last one that I have is Cat. Talked about the cats and the dogs, and this is Caterpillar. This is like a bull wedge pattern as well, as it broke out after earnings, now pulled back in lighter volume to a moving average, right? So I kind of like Cat right here above the 21. You could see the volumes drying up here as it pulls back. So I'm not going to make any snide comments today. I'm going to be nice. And I want to thank you for watching. And we never give up.